Good morning, everybody, and welcome. When I was sitting and talking to Billy and Lee and to Chad, and it reminded me of a quotation which I really like, which was by a guy called Vinod Khosla, who many years ago made the computer Sun Microsystems that used to sit on every trading floor in the late 90s. And he said, the future is not seen in the rear view mirror. And I think as I spoke with Lee and Billy, and I suddenly was going, it's just an incredible moment that we're now living in terms of the banking world. The speed of change is the speed of light. And really, I think it's a moment of maximum disruption and maximum opportunity. And as I listened to the gentlemen, I realized that they had some tools which could make that moment of disruption easier for players in the market, but particularly yourselves. And I look forward to hearing these presentations, which I think will give everybody a roadmap as to how to do things faster, how to understand our customers better, and how to react more profitably for the businesses going forward. And on that note, I'm going to turn to our speaker, Lee. Can you come up? Lee, President of TransUnion Africa. It's a pleasure to have you here in Nairobi today.
Thank you, Aly-Khan.
Thank you.
Thank you very much for coming out today. This represents our first roundtable in Kenya from a TransUnion perspective. Part of today's conversation is how do we provoke the change we need to see in Kenya. So I'm going to talk about something called the consumer first era. And part of thinking about the consumer first era, we need to get our heads around what we need to do as banks and lenders to be relevant in this new age you're in, right? Now, it's important to note that things are not as good as you'd like to, right? Be right in Kenya right now. I come from South Africa. I'm the regional president for all the countries we operate in. But let me just juxtapose Kenya with the toughness I see in South Africa. South Africa has an upward revised GDP of 1.5 in the last quarter, upward revised from 0.8. The national disposable income, 76% of that goes towards servicing our national debt. 7% unemployment, right? Africa is growing between 4 to 6% GDP across the continent. South Africa is growing at 1.5%. When I think about where we are today, it's almost a very different place. I'm in Kenya. I couldn't think as fast as you guys did, even if I tried, right? And that's the potential that we have in Kenya. But how do we start to realize that? Because in the world we live in, things are becoming increasingly tough. Not just for us as citizens, because surely as citizens of Africa, as citizens of Kenya, we want to make this a much better place. But when we start to think about what we do and how do we operate, how do we become relevant? So today's conversation, it's less about being a bank or being a bureau, but it's about being the thing that you need to be to drive your relevance, not just to your country and to deliver on the growth you see for yourself, but to yourself as citizens, because first and foremost, we are citizens of Kenya. When we think about how we want to treat it and how we want to be with our families, what does it mean for us as organizations? How do you reciprocate the intent that we feel in our hearts and when we are with our families? So we've got to think about this very, very differently. We've been going about this thing for a long time. The organization I took over actually started in 1901. I wasn't there back in the day, but I was told Aly-Khan was really cool, right? But things have changed, right? So back in the day, it was a monopoly. And in my country, and I have 5 competitors. My market share has been going down for a long time. And I was brought in as what you'd call a change agent. And the question was, as a bureau, how do you reimagine who you are? How do you drive your relevance? Is driving your relevance, Aly-Khan, doing the same thing cheaper than everybody else? That's what we call the vortex effect. If you do the exact thing over and over again, like in the telcos or in the banking sector, you'd find that the entire concept of hashtag data must fall or hashtag bank must fall, it's a guaranteed certainty unless we think about this differently. So the very notion of what is a bank, what is a bureau, what is a telco, what does it mean to be successful in this economy right now? How do we reset all the parameters that we have about ourselves, the very kind of concepts we have, these safety nets that we've set up for ourselves, how do you destroy those and reimagine how we go about things? Because the policy that started my business in 1901, the strategy that started in 1901, it's different, right? We couldn't think as fast as these millennials coming into the market, even if we tried, right? And that's interesting because by 2030, more than 60% of the workforce will be millennials. And yes, I myself, I'm a loyal person. I've been with the same telco for over 20 years. With a young niece or nephew you have, you offer them a gig more of data, maybe an ice cream, and they would change. There's no sense of loyalty that we have conceived in our minds. And when we think about banks, right, what is it that holds our customers to us? What is it that keeps us successful and relevant? Surely it isn't the banking product or the fanciest building, right, or the stripes that we have on the design of our facade. It's got to be more than that. And as we start to think about this world we live in, Aly-Khan mentioned that I have a digital background, and as bankers and as lenders, technology can be very, very scary. If you think about your nieces and nephews and your children, these youngsters, they know so much more than you could ever know. They were born on YouTube. They've been living on YouTube. They have no notion of terrestrial television. But here's a concept for you. Stop thinking about technology being adjacent to your business strategy. Stop thinking about technology being something that enables your business. And here's something that's really important to write down or to tweet. When digital stops being a thing, it becomes everything. Now we can talk about the hardware out there. We talk about by 2020, there'll be 50 billion devices connected to the internet. We talk about over 212 billion sensors being connected to the internet. We're going to find sensors in microphones, in televisions, in your cars. That's already happening. In your pot plant, right? We're going to start to have these pieces of information coming up from everywhere. So data will start to become the new lifeblood for the economy we live in. But if we focus on becoming au fait with the technology, we're missing the point. The entire substrate of Kenya, the substrate of Africa, is embedded with technology by default. And if we spend time talking about the how and not the what, we're missing the point. As Simon Sinek would say, we're going to start with why. What's the purpose? Is the purpose to have the coolest technology? Because that coolest technology is replicated within hours, within minutes, within weeks. It becomes commoditized really quickly. There's something more that we've got to focus on beyond that. So understand and take this away from today, that technology starts to embed in things. One of my good mates is a guy called Stafford Massey, and Stafford always talks about the Internet of Things. He says, guys, it should be renamed to the Internet in Things, because as we start to go forward, this technology becomes smaller and smaller according to a law called Moore's Law. And as the technology gets into devices, into people, into watches on your wrist, suddenly we're going to start to return to our humanity. We're going to start to devise experiences that are informed on real-time context. You would like to know that when you look to buy a company, make an acquisition, you're informed by the most real-time information. If that information is a month late, if you're making a decision to go left or go right or choose between two companies, I would like to think that you know exactly how I feel at a point in time, at that point in time that matters. And that's the world we live in. So as you think about technology, stop thinking about technology. Recognize that it's part of everything that we do, and start to understand, when you talk about business strategy and your bank's growth strategy, that technology is intrinsically one and part of the same. Now, as we think about this concept of what are we focusing on, the results we seek will start to take on a different flavor and a different feel. The results you're looking for is not to win my heart on having the sexiest product, right? I want to be the guy that feels that my bank, my lender actually cares about me. That sounds crazy. Why should a bank care about anybody? But think about it. Why do I have loyalty to a specific bank or to a specific telco? One, I may have a false sense of loyalty for a long time. But if my bank starts to make me feel that they understand me, if they feel they actually know me in my point of need, suddenly it's more than just a cordial business relationship. It feels as if my bank is my family, if my lender is my family, because you start to know me. So Nirvana is starting to connect the dots between how I feel as a person and how the bank thinks I feel. And that's an important thing, because we spend a lot of time crafting go-to-market strategies, disruptive strategies, and then they fail, right? They fail because it could be the coolest product, but it wasn't done with the customer in mind, with the citizen in mind. In fact, we sat in our boardrooms, Aly-Khan, whiteboarding solutions that we thought made sense. However, we aren't in charge anymore. You've heard for many years, the customer is king, the citizen is king. But is that intrinsically part of how we think about decisions? How do you actually start to know the customer, to know what makes them stay? If you think of your coolest technology device in front of you, I've been an Apple fan, admittedly, for a long, long time. And when I open up this box of my new Apple X phone, before I even saw the phone, I was awestruck. The box was amazing. It was that crystal white that every iPhone comes in. When I opened it, I was blown away. I hadn't even put the phone on yet, and it looked amazing. It felt like the best purchase I've ever made. How do you capture what Steve Jobs did with Apple in your bank? Would someone ever tell you as a bank, oh my God, you guys understand me, or this product talks to my needs emotively? You seem to understand me. My son's a massive fan of pizza, one of these multinational brands. And it so happens that this pizza house that I buy from is actually, they have a nice digital app. However, the pizza company doesn't know that I'm not the one that likes pizza. It's my son. So on a weekly basis, I get spammed with a 2-for-1 special for pizza. If the pizza company sought to put the effort in to figure out that my son liked the pizza, they'd probably pitch me Nutella or chocolate-based pizzas, and I'd probably buy more. I spend my time being irritated at their lack of caring about myself. And in a similar world, whether it's pizza or banks, everyone starts to consider you the same. Why is that, right? We start to talk about something called a direct competitor to an extreme called an experiential competitor. The way I feel on WhatsApp, where I can instantaneously SMS you or WhatsApp you and you respond back, that's how I want to feel. So we think as the lending economy, as the bankers, the lenders in the room, that my comparison, Aly-Khan, is another bank. It's not. It's Facebook, it's Amazon, it's that instant gratification that a 12-year-old gets that we can't seem to appreciate. So surely the results have to take on a different meaning, and we need to think differently about how we approach our customers and our go-to-market strategies. Now, you're going to have to find some new friends. Now, not that you don't have friends. I know you have lots of friends. But this economy in Kenya, it's prone to disruption. You've got these MFIs coming on board as we speak. In South Africa and across Africa, these fintechs are disrupting us. Now, we could ignore them. We could try and push back. We can try and put in regulation to block them out. But could it be possible that we have an ecosystem where we all are jointly working to solve for a problem that sees Kenya grow, that makes us create a better life for all its citizens? Now, for a long, long time, we've been thinking these are guys that will come, they'll fly away, they may actually destruct even before they commercialize. But what if we start to think about how we coexist? Now, it is an important concept to think about, that things that you do in a bank or in a lending business, you aren't good at everything you do. You may have an idea, right? But you can never commercialize the idea because you've got 10 other ideas to work on right now. But what if you came together, where you put together things that you're good at doing and things that other people are good at doing, and put together the recipe for success? Why is it important? What you are to me as a customer, your customer value proposition to me as an end citizen is important. How you actually go about doing this, I actually don't care. Now, it sounds very stark and very hard, but when you think about the world we live in, it's becoming highly commoditized. We're in that Uber-type world, connecting demand, connecting supply. And we think about ourselves as a bank, right? Are there things that we could take to a customer to drive our stickiness, a sense of loyalty? And how do you actually do that without doing everything by yourself? And the world that we live in, one where digital is everything, it stops being a thing, allows us to cross boundaries, to break the silos. What is the biggest challenge? Not the technology, not the fintechs, not the other sectors like in the telcos, right? It's us as humans. We've got this long sense of loyalty towards ourselves. It's all about Lee, it's all about Aly-Khan, it's all about John, right? How do you break that down? Because once you start to break the silos, we start to think differently. We start to embrace change like nobody else would. Now, these friends of technology have been very, very clear about it. And very simply, if you can't appreciate it, you can't manage it. These fintechs are coming out of left field. They're everywhere. Everything you perceived as a really good medium-term strategy will be disrupted tomorrow, if not tomorrow, the day after. It's really on an ongoing basis. There are over 350 innovation and incubator hubs across Africa. The top 5 countries includes Kenya, right? So we've got the hubs. It's going to happen. It's when will it happen? And I ask you, what will you do when it comes knocking at your door? How do we start to see that pattern? And how do you think about this differently? And what are these guys doing? They're starting to not just think about being a business, but they're starting to solve a problem that people care about. If you're focusing on the commoditized problems that you're not so good at doing, they're focusing on the non-commoditized problems that people actually care about. And those are the ones that will have the biggest impact as we go forward. So let's talk about this consumer. Now, for a long time, we've used what we call traditional financial data, whether it's the data we have in our current systems, in our records and folders, or what the bureaus like TransUnion have. Now, over the last 17 months that I've been with TransUnion, we've started to think a little bit differently about this thing called information for good. You know, how do we infer behavior, right? Potential behavior in someone. Now, I spoke to you earlier about the country I come from and the high level of indebtedness that we have as a country. One of the challenges coming out of apartheid into a pro-democracy era is how do you start to drive this egalitarian type agenda? Now, the sins of my past are being held against me, right? Now, all of us typically either use it from a scoring perspective or risk perspective, but we typically do what we call point-in-time decision-making. So right now, how does Lee look? Let me judge Lee, and based on how Lee looks, I make a call. But Lee is about to go really bad, for example. Lee may have picked up a second girlfriend, bought a new car, picked up a racehorse habit, right? But right now, at a point in time, you've seen that. Equally so, Lee could have come from the communities. He's put the hard work in. He's had a really hard time. And when you start to think about Lee, surely Lee deserves a better chance. But the system, whether it's here or in South Africa or anywhere around the world, has a very specific way of working. So for us to be relevant, we've got to scrap these policies, procedures, the very kind of concept of what we believe is wrong or right. We need to reimagine what it is to serve our customers. What holds us back is ourselves, those processes and those policies. Now I'll give you a few examples. Up on the board are 6 kind of indicators of data we've been playing with to infer things about consumers. So for example, where I stay, right, I could be a millennial. I could live in an area where you don't know much about me, what we as bureaus call thin file customers. It could be that you know nothing about me, but based on where I stay relative to other people that live in a certain area, what could you tell me about that area? Could you overlay economic data, income data, behavioral data to tell you whether I'm a good or a bad person? Could you see that in me? The other thing about degrees, when I started my career back in 1997, one of the requirements for joining my then company, Anderson Consulting, was that you had to have an accounting, engineering, or science degree. That was your ticket to the game, right? Over the last few years, almost every person I've hired from a digital perspective has had no degree. That structured way of thinking is almost the wrong thing to have when you're trying to reimagine your business, right? Now, for example, could I infer that a person studying an actuarial degree in year 1, that 99% of people that start an actuarial degree turn out to be actuaries and typically end up having a certain kind of job? And if I could model that data and behavior, could that be useful to considering me a good or a bad person? What else is there? A mobile phone. What about the behavior in the data? Like in South Africa, we have access to data that actually contains the whitelist and blacklist information. So every SIM card put into every device, and as many as those SIM cards are, we hold the marriage between those 2 devices. We've been able to use that across all telcos to figure out the propensity for fraud, right? So based on syndicate behavior, there's a certain pattern that emerges. And we've been able to use that data to figure out in real time what is the chance of an e-commerce online transaction in a few milliseconds being fraudulent or not. Now, I may look the part, I've put a really fancy tie on, but what can you tell me about these converging worlds? The digital world I play in and the real world I live in. What else is there? On the bottom left-hand side, it's that targeting of customers, right? We are spraying and praying right now. But in a time where money is precious, we've had these interest rate caps that have seen a decrease in the lending activity. Can we afford to spray and pray and hope we find the right people? Where are those people that meet the requirements of your strategy for your bank, where you're targeting your growth? And if you keep spraying and praying, are there better ways to find a Naik in the context of what you need for your organization? Car data, right? For example, every car I've ever had is an Audi, right? Jared, if you try to offer me a BMW at a discount, I'll probably take the deal. But it's only a matter of time before somebody offers me a really good Audi, and I'm going to go back, right? How do you start to find that humanity, that data that says it's more than just the dealy ones? And as I'll keep telling you, you got to be aware of this vortex effect. It's going to suck us in, right? And it's more than just the product, the price, or even the packaging. It's that humanity we have and how we go to market that's going to drive us forward. And then finally, one of the things that our new president in South Africa has been talking about is something called lifestyle audits, right? South Africa has the highest economic corruption in the world, Aly-Khan, in the whole world. So part of the focus on us as a country, Jared, is to actually sit and see, how do we undo that? How do we undo that? And one of the things I need to do now is I need to understand, so Naik is the citizen, but Naik works for TransUnion. Does Naik work somewhere else? Does he have any assets that are not with a bank, but they're insured? When you start to piece together all these little dots of data, the picture starts to emerge, right? Now, this is the point about understanding somebody better. We have a preconceived notion of what a customer is, what is good or bad about them. But it's a point-in-time snapshot that tells us a limited amount of information. But in a digital world where I talked about 212 billion sensors, with all that information flowing, if we change the question, not the answer, because the answer is irrelevant, if we ask the right question, the answer will follow. And I keep repeating the concept of Simon Sinek: why then what then how? If the purpose drives us, the proposition follows. And if the proposition follows, how is actually little important, because we can find those. If it doesn't exist today, it'll exist within a week or two. So that's an important thing to think about, that the data we need to drive or kickstart the resurgence of the economy, whether it's here or across Africa, is at our disposal. Sometimes we're scared of the technology, but as we start to think about the data at our disposal, we need to start thinking differently, not about the answer, about the question that triggers the strategy to turn around. Now, this concept I've spoken about is something we call alternative data. You can Google it, you can research it a bit later, but the entire notion of using alternative, non-financial data to infer behavior in a financial domain is going mainstream, right? It's been mainstream in the US for about 5 years. It's now in Hong Kong, Colombia, India. We're the first to bring it to South Africa earlier this year, and now I'm driving my Kenyan agenda for alternative data. But the sources of data are there. We have more data than we'll ever need. But as we start to think about our relevance, the question is, are we really opening our minds to new ways of working? And we always assume that we won't get it, but have we asked for it? I have a colleague, Jared, this will blow your mind. I have a colleague in Colombia that's been collecting Tupperware sales data. You guys know Tupperware? Tupperware sales data for many, many years. Avon sales data. And when the Colombian market was on duress, the question was, could we start to reimagine this financial services sector, and how could we figure out in this economy, right, of people that all needed a second chance, who are the ones that could deserve a second chance? And using data about humans in their normal day-to-day lives will start to infer things. The entire notion of what is used or what is not used should be broken. And I'll give you some really good examples in a second. Now, the concept of getting better or getting worse is important. Now, we are very judgmental, all of us, including myself. I'm not sure whether you guys know this, but it's inherent to who we are from a decision-making perspective. What we don't always think about is whether I can get better or get worse. Now, as I walk into your office and you're about to make a decision, digitally or physically, you kind of consider me right there. But what about the journey we've been on? For example, let's use scores as an example. I know not everyone's using scores as a basis for decisioning, but that's starting to become more and more thing. And I expect to see a lot more adoption as we go forward. Now, let's use the analogy of fish, right? So there's a trout dam, and we're all fishing in the exact same trout dam. We've all been fishing for the last 15 years. At some point, these fish are going to start to run out, right? The trick is, is there a better way to catch the fish? Maybe. But more importantly, is there another dam that nobody knows about? It's covered in some shrubs, and if those shrubs were taken about, there's an abundance of trout waiting to be caught, right? That analogy of looking in a different place, something we need to think about, right? The entire analogy that I may not be good enough for your bank today, but I could be good enough for your bank in 3.2 months, in 6.4 months. This concept we've been working on for quite a while. The concept is called trended data. Trended data introduces the concept of behavior into how you think about data. The propensity to be good or bad is something that's really important. We all know about the Lehman Brothers crisis in the US. We all know that Fannie Mae, Freddie Mac were some of the mortgage players that suffered a lot, right? We asked Fannie Mae years ago, Aly-Khan, we asked the question, could you reimagine where your customers come from? What if all the good customers are gone to all the other good banks? All the banks are good. Could you find a set of customers that lie just under, they're bubbling under? Could you see them before anybody else could? The same concept of the trout, right? Could you see them? We've written a model about 5 years ago that we took to all the different countries. In South Africa, because it's a local African example, we've got 55 million people, 25 million are credit active, so they're good enough to be accepted by banks, lenders, insurers. However, we have an economically active population around 33 million, meaning there are 8 million people that are living below that line of acceptance by a typical tier 1 bank, telco, insurer, vehicle asset player. These are the people that hide their money under their bed like my dad does in a small tin, refuse to trust the system. These are people that are having their money on a digital currency, or they with some microloan or payday player, what we call mashonisas in South Africa. These loan sharks that give you high interest rates is about 8 million. When you start to think about alternative data, what else could we use to know these people better? They all want a second chance. They all want better rates. They all want financial and social inclusion. Then we ask the question, what if we could model their behavior over a period of time, right? We looked at the entire population of 8 million people. Of the 8 million people, using this new technique of alternative data and trended data, we call it credit vision, we found 3 million new consumers, net new, that no bank has ever seen before, right? Think about that. You're looking to grow your bank amidst a high or controlled interest environment. You're looking to find relevance where your competition is at the highest. Every bank is competing. The fintechs are competing. The digital guys are competing. International players are coming after your consumer base. What do you do differently? 3 million net new consumers on top of 25 million. Here's the scary part. The journey has only started. And when we talk to some of the banks, they say, it can't be so. How is it possible to find new customers? Well, it comes to reimagining. The normal way of working Javed has to change, right? If we're going to find a new way to engage, to find new customers, we're going to think differently about where those customers sit, what defines them for us as organizations. Now, I guess the key question to think about is, as you think of people coming through the door, when you think of me and my wife sitting at your desk, can you see that I'm a better person? That humanity has to return. Remember I told you earlier, when digital stops being a thing, it becomes everything. When you have that data that includes humanity, the behavior in it, can you see, not just by looking at me and seeing the intent in my heart to be a better person, can you start to see that I'm actually becoming better? I'll give you an example. On the 6th of February, we launched Credit Vision in South Africa. Within a week, I received a physical letter. It was hand-typed, it was typed out on a typewriter, of all things. It came to my office in the middle of South Africa, and the letter said, "Dear Mr. Naik, I see that you have built this thing called Credit Vision. Can you please tell me, sir, which bank is using Credit Vision? I really want a second chance." right? And the banks refused to give it to me. It's an actual letter that I can show to you guys at some point. I decided to pull the individual's information from our database to see how dire his situation was. At one point in time in the last 5 years, he had 47 accounts that were concurrently in default. 47. This individual was stuck. He was looking for rolling loans to pay off the first one. He was up to 47 at the same time. However, over the last 17 months, we saw a pattern of behavior that is improving. 47, down to 31, down to 33, down to 23, down to 17. And now for the last 9 months, he was completely green. Completely green. 0 accounts in default state. And he said, Mr. Naik, can I get a second chance? Now, he wasn't ready yet because the way the model had worked was it required a little more predictability to go forward. But we could even tell a bank that was using a model, if this individual showed up at the front door, how much more time he would need before he become a good customer. And that's important because when you talk about financial inclusion, when you talk about social inclusion, when you talk about being a better life for all in Africa, isn't this what it's really about? Yes, there's commercial revenues, there's growth for us, but there's a bigger purpose driving us. Surely that's what takes us forward. When you think about a customer, we look at a person and say, you can't be a good customer. You don't exhibit the attributes or the traits of what looks like a good customer. But in the world we live in right now, where the workforce is changing, becoming younger, more digital, there are folk like the person on the screen, we're going to say, you don't look like a good customer. But where's the humanity? Can we start to find new ways to consider this egalitarian type society where everyone deserves a chance? Right now, the system says no, very violently so. How do you rethink that? And then finally, I know this is quite a Google and a Bing type crowd. You guys all have your smartphones here. It's important as a bank to think about this. My digital aspirations that I have are not the same as my offline reality. We tend to confuse that. So you find that I'm surfing on the internet, I'm looking for a holiday to Thailand, right? I can't pay the rent at my house. I can't pay for food in my house. Nirvana, once again, is converging my aspirations that I have when I imagine my life, a better life, converging that with my offline reality. And the bank and the lender that spend time finding the true Naik, the true consumer in all of this, is the one that's got my heart. And I promise you today, it's not about the product, it's not about the price. When you win my heart, you've got everything, right? I'll leave you with a final quote that really appeals to me by Richard Frankel. If content is king, then context is God. If context is God, then data is its religion. Thank you very much.